Good opening for the Nifty, up about 120 odd points. Nifty is holding up with gains of about 80 odd points.
Markets are up in the green. We have Nifty sitting with gains of 45 points.
It was a day where the bulls gave up their gains on the index, and the Nifty actually came off quite a bit.
Safe to say that it was a classic expiry day today, with the markets opening well, then seeing a bit of a decline, then picking up in late trade.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track 6 hours of the day's trading action in 5 headlines. I'm Sonia Shenoy, and these are all the top headlines for the day. The Sensex and the Nifty end in the green after a range-bound session. The October F&O series draws to a close with a 6% gain for both the indices as the bulls regain lost ground. Dabur surges over 3% on a deal announcement. The FMCG major picks up 51% stake in Badshah Masala for over 500 crore rupees. And Axis Bank and SBI tell CNBC-TV18 that growth can't be sustained without a pickup in deposits. Meanwhile, Axis is committed on Max Life and currently does not plan on a fundraise. Axis Bank gains over 1.5%. SBI also gains marginally. And a negative surprise on margins hurt Gland Pharma, while a US FDA import alert for Glenmark Pharma's unit is a dampener. Even Aurobindo Pharma recalls 2 drugs. And metal stocks gain amidst positive global cues. The Nifty Metal Index closes over 2.5% higher. Stocks like JSPL, JSW Steel gain over 4% each. Well, here's the lineup of what we have in store for you. It's a packed show today in Market Opinion. We have Hiren Ved, the CEO of Alchemy Capital Management, and Arvind Sanger, the managing partner of Geosphere Capital Management. In Big Corporate Voices, we have Amitabh Chaudhary, the MD and CEO of Axis Bank, and Dinesh Kumar Khara, the chairman of SBI. Well, let's start with the day's market action. The Dalal Street recorded big gains in the last 3 series while closing a volatile trading day with minor gains. So let's tell you a little bit about today. It was a tussle between the bulls and the bears today, no two ways about that. The Nifty ended with gains of around 80 odd points, while it was a 100-point recovery from the lows of trade. The Nifty closed above that 17,750 mark, and you had a big move that came in the Sensex as well, almost a 300-point rally. The dips got bought in late trade, and the Nifty has now found firm support at that 50-day moving average of 17,500. It was a spectacular series. The Nifty was up 6% in the series, and now we're not too far away from the all-time high, just about 3 to 4% away from an all-time high. If you look at the gainers today, it was clearly led by the metals pack. So top honors to names like JSW Steel, Hindalco, as well as Tata Steel. You also had Sun Pharma and Bharti Airtel that were up in trade, big gainers over there. In fact, Bharti Airtel hit a record high today, and Axis Bank and Kotak Mahindra Bank, after its good set of numbers, continued to rally. Apart from that, on the losing end, you had the Bajaj triplets, Bajaj Finance, Finserv and Bajaj Auto, that ended in the red, anywhere between half to about 2% And then you had a couple of these tech names like Wipro, Tech Mahindra and Infosys that came in for a tad bit of profit taking. But the market, after all the volatility, ended well in the green, and the bulls once again have regained control. In expert opinion, though, Hiren Ved, the CEO and director at Alchemy Capital Management, said that the earnings season in India has been reasonably good. About the banking space, he said that net interest margins may peak out as deposit rates start going up. Listen in.
I have no doubt that, we are very close to new highs, and you could hit new highs, sometime soon. I think Indian earnings have been reasonably good. And I think India is on a fairly good wicket, both when it comes to macro and micro. And as I've always been saying, the Indian market is behaving like a strong stock. It corrects less when global markets correct. And at the first signs of stability, we kind of take off. And I don't see that changing dramatically. Clearly, public sector banks is one area where there was both value and growth. And therefore, we are seeing the kind of performance that we are seeing in the public sector banks, right? Also, I think given where we are, if there is one read-through from all the financials, results that we've seen so far, obviously credit costs have been very benign. credit growth has picked up. But I think soon, in a quarter or two, there will be a fight for deposits. And that, to my mind, is likely to put some pressure on NIMs going forward. Not that the banks can't handle it, but in my view, we are, maybe another quarter of good NIMs, and then I think NIMs will peak out as deposit rate starts to go up.
Okay, that's the view on the financial space. However, Arvind Sanger, the managing partner at Geosphere Capital Management, said that there is a good chance that we are in the middle of a bear market rally. Listen in.
The reason I still believe that there's a pretty good chance that this is a bear market rally, although, they are probably more fun than bull markets because bull markets go more gradually. Bear market rallies are much more rapid. But the reason I still think this is a bear market rally is because I do believe that the impact of all these rate increases will come in 2023 in terms of economic slowdown and probably a recession. And I don't think that inflation is going to be quite as fleeting and as easily licked as the bulls would hope for.
Okay, well, let's get to the second headline now. Dabur rallied over 3% after the FMCG major acquired 51% stake in Badshah Masala for over 500 crores. Mangalam joins in with a wrap-up of the deal contours and the opportunity in the spiced market space. Mangalam, over to you.
The Indian spice market is heating up, and the latest entrant in that is Dabur with a 51% stake purchase of Badshah Masala for about 587 crores, valuing the company a little over 1100 crores. So what does that mean? By their own estimates, it is a 4.5 times FY23 price to sales and 20 times EV to EBITDA. So what does this mean? That Badshah's FY23 revenues are likely to be around 256 crores with margins of 23%, EBITDA of just shy of that 60 crore mark. However, the data point that stood out for me the most was that 82% of their revenues come in from blended spices sales. What are blended spices? Blended spices are basically not regular spices, but pav bhaji masala, kitchen king masala, chaat masala, so to say. It's marked a foray into a 25,000 spice category, which at 2020 was 24,000 crores, and by 2025 is estimated to be 50,000 crores. Why is that? Well, because currently only 24% of the market is organized branded. By 2025, this is likely to be 50%. And in that, the fastest growing segment will be that of blended spices. Currently, blended spices account for just 24% of the sales. Going forward, this is likely to be 65%. Why is blended spices the key growth driver? Well, because blended spices have 3 to 3.5 times higher realizations. I mean, you can take 5 different masalas and sell it separately, or you blend it as a pav bhaji masala and sell it for 3 to 3.5 times the price. And that means the gross margins jump from 33-35% all the way up to 50-odd%. What are the other drivers in the spice market? The biggest driver is the number of deals that have taken place. In November 2019, we had Investcorp investing almost 80 crores in Intergrow brands. Then May 2020, we had some other, big announcements as well. ITC entering the 2150 crore deal with Sunrise Foods. June 2020 and September 2020, we had big investments. A91 investing 125 crores in Push. And as of September, we had Okla and MTR buying Eastern Condiments for about 2,000 crores. In the listed space, we've heard, Tata consumers selling spices under the Tata Sampann brand, and Nestle as well, selling their Magic Masala under Masala-e-Magic, those brands. So it is a market which is growing fast. What are the key drivers for the growth? Higher share of organized market, higher gross margins, and increased experimenting in kitchens, which actually started during the COVID times itself. And also people need convenience, so they're ready to, spend in masalas as against making them themselves, and higher brand stickiness. If you like a certain masala, you're likely to stick to it through your lifetime. But what are the problems for this market going forward? Regional local companies are the ones which dominate because you want a certain taste coming in from a certain brand itself. So high stickiness can be a boon or a bane. Different cuisine and taste palettes in India are not one big company can succeed here, which is why we've seen a lot of regional players, and there has been a lack of success by MNCs in the past who've looked at this spice market. The question is, can Dabur spice things up here?
Okay, thanks a lot for that. Well, staying with FMCG players, LT Foods also saw healthy gains in trade. We learned from sources that private equity funds may be in the race to acquire a significant stake in the company. Vivek Iyer is joining in now with details on that. Vivek, over to you.
Well, the stock in focus is LT Foods. Now, what sources indicate to us is the fact that, PE funds are in the race to acquire a significant stake in the company. And what we understand also is that this particular stake acquisition that may come in may actually cause the management of the company or the management control equation to actually change. Now, if this particular acquisition does happen at the significant premium that we understand that could happen to the current market price, it would actually trigger an open offer as far as the stock price of LT Foods is concerned. So that's another important trigger to keep an eye out for as far as LT Foods is concerned. More importantly, the PE fund that does come in, what will be the target and what is it that they're looking for from LT Foods is the other important thing to track. Now, interestingly, the company has actually gone ahead and given a notification to the exchanges on October 25th. What they've said is that the board meeting is going to be held on 31st October, and this is mainly to consider fundraising as far as LT Foods is concerned. They're also going to discuss future strategic plans, and along with that, we'll be discussing reorganization of shareholding framework of subsidiary companies if required. So we reached out to the management of LT Foods. We sent an email to them. We are yet to receive a response to the email that CNBC-TV18 sent to them. It's going to be interesting to wait and watch what exactly is the outcome of the meeting.
Okay, thanks a lot for that. Well, the third headline today, growth can't sustain unless deposits pick up. That's the word coming in from Axis Bank and State Bank of India. However, SBI believes that growth in the credit is a sign that the economy is in an upswing. He added that SBI has witnessed an uptick in credit as well, especially in corporate credit. Take a look.
It's a very, very dynamic situation. What we are observing is that there's a decent credit growth, which you also just mentioned. And of course, to fund that kind of a credit growth, deposits are, of course, very, very critical component. The remaining part of the current year, we will get to see some money being spent by the government, which will also bring in more liquidity in the system. Yes, of course, currently the banks are increasing interest rates depending upon their ALM situations. But yes, I think it's a very positive sign. If at all the credit is growing, that's a very clear reflection that the economy is on the upswing.
Our intention and desire is that Max Life gets listed at some stage. Obviously, it has an implication on the Max Financial Services shareholders. So I'm quite confident that again, Max Life and Max Financial Services is working with the regulator at a macro level for the loan growth to sustain at this level, given where the deposit growth is not possible. You cannot have a situation where deposits are growing at in a single-digit rate and the loan growth is racing ahead at 18-20%. Actually, loan growth needs to follow the deposit growth.
All right, in other news, the Kerala High Court has ruled in favour of Lakshmi Bank on the issue of the writ petition filed by 4 shareholders demanding board positions. Their candidature was rejected by the board last year, which prompted them to challenge it in the High Court. Ritu Singh joins in with details on that ruling. Ritu, over to you.
A relief indeed for Lakshmi Bank, because the Kerala High Court has upheld its appeal against the writ petitions filed by 4 individuals who were seeking board positions. Now remember, these writ petitions were filed by 4 shareholders, individuals whose board candidature was rejected by Lakshmi Bank last year, and thereafter they had moved the court to challenge that. But now Lakshmi Bank stands vindicated because the court has said that these petitions are not maintainable under law and that any board appointments would have to pass RBI's fit and proper criteria. We're also given to understand that Lakshmi Bank will soon file a caveat in the Supreme Court to ensure that there is no further litigation in the matter. Now, this ruling is very important for several reasons. One, it will allow Lakshmi Bank to proceed with its annual general meeting, which was stalled because of the ongoing litigations, and thus expand its board, which is currently 1 short of the minimum number required under SEBI rules. Now, remember, the bank has also been under RBI scrutiny because of its financial position, and thereafter RBI had also appointed 2 members on the board of Lakshmi Bank, which still stands at 5, 1 short of the 6 required by SEBI. Now, once the board formation is complete, the bank can also proceed with its fundraising, which is also critical, about 130 crores of rights issue, which was stalled again because of these ongoing matters. Now, remember, this also comes at a time when a section of the shareholders representing about 13% equity in the bank have called for an EGM on the 12th of November for 2 key items on the agenda. One is authorizing one of the board members to reach a settlement with the writ petitioners, something that will not arise rise now because of the Kerala High Court order. The second is curtailing the powers of the MD and CEO J.K. Shivan when it comes to expenditure. That is going to be critical to watch out for because the shareholder management tussle in the past as well has led to several top-level exits, including the former MD and CEO as well. So we'll have to see how that plays out. But as of now, a relief for the Lakshmi Bank.
All right, relief for the Lakshmi Bank. Let's slip into a quick break on that note, but do stay tuned in. We'll be back in a jiffy with all the top stories of the day. Stay tuned.